XRP just saw a 13% price spike, crossing the $2 mark. The reasons? Two key developments. First, U.S. President Donald Trump announced a 90-day suspension of most new tariffs, reducing them to 10% for over 75 countries, while sharply raising tariffs on Chinese imports to 125%. Second, the launch of the XXRP ETF on the New York Stock Exchange added extra momentum. The broader markets reacted quickly. The S&P 500 rose 9.5%, while Bitcoin surged past $80,000. This again shows how interconnected crypto is with global trade and political decisions. But now, the XRP community is turning its eyes to something else: interest rate cuts. There's growing speculation that the U.S. Federal Reserve may soon ease rates, and many believe this could trigger another wave of bullish activity. According to XRP community analyst, Things XRP, rate cuts mean more liquidity, which often makes high-risk assets like crypto more appealing. He explained, every time the Fed eases policy, capital becomes more accessible. This creates an environment where investors might move away from low-yield options like Treasuries toward riskier assets, including XRP. History supports this view. In 2019, 3 rate cuts helped Bitcoin double in value. In 2020, near-zero rates were followed by a massive crypto rally. When Bitcoin rises, XRP often follows, or even outperforms it. Still, not all rate cuts have led to gains. In September 2024, a 50 BPS cut pushed Bitcoin up 4%. But a smaller 25 BPS cut in December had the opposite effect. Bitcoin dropped 4%. So the market's interpretation of the context behind the rate cut really matters. As Things XRP noted, it is not just the cut but the story behind it. If market participants smell a recession, they pull back. Right now, pressure is mounting on the Fed to lower rates again in 2025, and even Trump is leading that push. If cuts do happen and are seen as signs of confidence, not crisis, XRP could benefit from another strong rally.